Hey everyone, and welcome back to the channel, your go-to source for understanding the complex world of hard-to-borrow stocks and potential short squeeze dynamics. Today, we're diving deep into a fascinating ticker that's appeared on our hard-to-borrow screener CJMB Inc., trading as CJMB. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's talk about CJMB. CJMB Inc. is an industrials company specifically operating within the integrated freight and logistics sector. Through its subsidiary Cold Chain Technology Services, LLC, CJMB provides critical thermal management logistics solutions to the life sciences industry here in the United States. Think specialized shipping for sensitive materials like personalized medicine, a niche, but vital service. CJMB currently has a market capitalization of just $8.01 million, placing it firmly in small cap territory. Now let's look at some recent price action. Short chart CJMB 30-day CJMB has been on an absolute tear lately. Today alone, it's up a remarkable plus 19.1%. Looking back, the last 5 trading days have seen CJMB surge by plus 94.86%, and over the past 30 days, it's gained an impressive plus 87.74%. Highlight levels volume-wise today saw 2,266,600 shares traded, which is slightly below its 30-day average volume of 2,502,446 shares, putting its relative volume at about 0.9x average. What is cost to borrow and why it matters? So, what does it mean for a stock to be hard to borrow, and what is this cost to borrow we keep mentioning? Simply put, the cost to borrow, or CTB, is the annualized interest rate short sellers pay to borrow shares before they can sell them. It's essentially the fee for renting someone else's shares to bet against the stock. This fee is paid to the broker, who then passes a portion onto the original share owner. The higher this fee, the more expensive it is to maintain a short position. Why does it matter? Because a significantly high CTB can signal a couple of things. Either there's very high demand from short sellers to bet against the company, or, more interestingly, there's a very limited supply of shares available to borrow. Why this stock is hard to borrow right now? This brings us directly to CJMB Inc. and why it landed on our screener. CJMB's current annualized cost to borrow fee is an astonishing 815.9%. Yes, you heard that right, over 800%. Emphasize number, this fee isn't just high, it's been skyrocketing. Over the last 5 trading days, CJMB's CTB momentum has jumped by plus 543 percentage points. This dramatic increase suggests rapidly growing demand to short or an even more rapidly shrinking supply of shares. Adding to this scarcity, there are currently only 50 shares of CJMB available to borrow across our track brokers. Highlight number, while the estimated float for CJMB is currently unknown, having only 50 shares available tells you just how incredibly hard it is to establish or add a short position in CJMB right now. Our internal composite squeeze score for CJMB, which combines CTB level, CTB momentum, borrow supply, float, and technicals, currently sits at a moderate 40.7 out of 100. This score indicates elevated interest, but not an extreme situation. It's crucial to remember that a sky-high CTB doesn't automatically guarantee a short squeeze. Sometimes, short sellers have extremely high conviction in their bearish thesis and are willing to pay exorbitant fees to maintain their position. Squeeze mechanics explained. Let's quickly break down how short squeeze works for those new to the concept. When investors short a stock, they borrow shares and sell them, hoping the price will drop. If it does, they buy the shares back at a lower price, return them to the lender, and profit from the difference. However, if the stock price unexpectedly rises, short sellers start losing money. As the price climbs, they face increasing pressure, their losses mount, their cost to borrow fees explode like CJMB's 815.9%, and their brokers may issue margin calls demanding more collateral. When the supply of borrowable shares becomes extremely low, like CJMB's mere 50 shares, it becomes incredibly difficult and expensive to borrow more. This forces short sellers to cover their positions by buying back shares in the open market. This sudden buying pressure further pushes the price up, triggering more short sellers to cover, creating a cascading effect known as a short squeeze. Dilution risk check. Now, an important consideration for CJMB, dilution risk. Our analysis shows a recent SEC filing, specifically a registration statement like SMINUS 1, SMINUS 3, or 424B within the last 90 days. This is a significant flag for potential dilution. In simple terms, these filings often precede a company issuing new shares into the market. Why is this a concern for a short squeeze? If a company issues a large number of new shares, this significantly increases the total supply of stock. Even if short sellers are forced to buy back shares, this increased supply can absorb that buying pressure, potentially offsetting or completely negating any upward movement the squeeze might have caused. It also dilutes the value of existing shares. So, even with a high cost to borrow, dilution can be a powerful counterforce to a squeeze thesis. On a positive note, we found no recent reverse split for CJMB in our look-back window, which can sometimes artificially inflate stock prices. Once again, a reminder, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For CJMB, here is what to keep an eye on. First, continue to monitor the borrow desk for any changes in the shares available to borrow. Will that 50 shares number fluctuate significantly? Second, track the cost of borrow fee. Will it continue to climb beyond 815.9%, or will it start to ease? Third, observe the price action and volume. Can CJMB sustain its impressive plus 94.86% 5-day run, and will trading volume consistently pick up above its 30-day average of 2.5 million shares? Finally, keep a close watch on any news or developments from CJMB Inc. or its Colchin subsidiary, and importantly, any further details regarding the dilution risk. CJMB Inc. CJMB presents a really interesting case study in the hard-to-borrow space, driven by an astronomical 815.9% cost-to-borrow fee and a scarcity of just 50 shares available to short. Its recent price action has been explosive. However, the moderate squeeze score and the critical dilution risk from recent SEC filings add layers of complexity. This isn't a simple buy and hold situation, it requires careful monitoring and a deep understanding of market mechanics. Do your research, stay informed, and trade wisely. If you found this breakdown helpful, please hit that like button, subscribe to the channel for more unique analyses like this, and let us know in the comments what stocks you'd like us to cover next. Thanks for watching.